Hello, everyone, and welcome to the Geostrategic Podcast.
Thanks for having me.
Thank you so much to all of you for watching or listening to the podcast today.
Yeah, it's great to be here.
The Pentagon has a problem with the F-35 fighter jet. A big problem. Reports say the U.S. Department of Defense may need another $13.7 billion just to keep the world's most advanced fighter fleet ready for combat. But here's the twist. What if this crisis is actually creating a massive opportunity for Lockheed Martin? And what if the real money was never in selling the jets in the first place?
Right.
In the next few minutes, we'll break down why a growing maintenance problem could turn into a long-term revenue machine worth billions, and why investors, military analysts, and defense contractors are paying close attention.
Absolutely.
Before we dive in, hit the like button, subscribe for more defense and investing analysis, and share this video with anyone following military technology or defense stocks.
Yeah, definitely share it around.
And I want to hear from you. Is the F-35 becoming a financial goldmine for Lockheed Martin, or is the Pentagon throwing good money after bad? Drop your opinion in the comments below. There are strong arguments on both sides, and I'd love to see where you stand. Let's get the discussion started.
Let's do it.
So, our mission for this deep dive is to basically execute a really short, precise geostrategic analysis of what's going on with the F-35 fleet right now.
Yeah, the current predicament it's complex.
It is. We want to explore exactly how this massive shift, moving from just producing the aircraft to actually trying to sustain them, impacts global military readiness and, the economics of global defense overall.
It's a critical pivot, really, in how we understand military capability. I mean, when you look at the latest updates coming out of the defense sector, the narrative is fundamentally shifting.
Shifting away from just buying them.
Exactly. Away from the initial excitement of acquisition. We're entering the very gritty, very expensive reality of long-term operational upkeep.
Yeah, the day-to-day stuff.
Right. Like you mentioned, the Department of Defense just signaled they need that additional $13.7 billion through 2031, specifically to address declining readiness across the fleet.
Okay, let's unpack this for a second, because declining readiness sounds like a really polite, bureaucratic way of saying these multi-million-dollar jets are just stuck on the ground.
Basically, yes.
I mean, we hear so much about spare part shortages and this heavy reliance on private contractors. It feels a bit like buying a commercial printer.
Oh, the old razor and blades model.
Yeah, the printer itself is cheap, but you spend a fortune on the ink cartridges over the next decade. Except in this case, the printer is the most advanced stealth fighter on Earth, and the ink costs billions.
That's a great analogy. Though I'd say it's more like buying a high-end Formula One car, but the manufacturer forces you to fly their specific pit crew out to your track every time you need the oil changed.
Oh, wow. Yeah, that makes sense. So the car is incredibly fast, but you don't really own the capability to race it on your own terms.
Exactly. And what's fascinating here is the underlying mechanism that creates that pit crew dependency.
Which is what, exactly? Just rare parts?
Well, it's not just that the parts are rare. It's the fundamental architecture of the aircraft. I mean, the F-35 is essentially a flying supercomputer covered in a highly sensitive, radar-absorbent skin.
Right, the stealth coating everyone talks about.
Yes. So when a military mechanic needs to fix, say, a simple sensor or a hydraulic line, they often have to open a panel. And doing that disrupts the stealth coating.
Oh, so you can't just pop the hood.
No, not at all. That coating then has to be meticulously reapplied and cured in a climate-controlled hangar. You're not just swapping a spark plug. You're doing aerospace chemistry right on the flight line.
That's insane. And let me guess, the military doesn't own the recipe for that chemistry.
You nailed it. The intellectual property, the technical data rights for how to do all of this largely belongs to the private contractors.
Man, that feels like a massive vulnerability. I mean, I understand fifth-generation fighters are complex, but in the past, with platforms like the F-16 or F-15, didn't the military eventually figure out how to do their own heavy maintenance?
They did. Historically, they owned the depots and they trained the mechanics.
Right. But now it sounds like military mechanics are effectively locked out of their own aircraft because the tech is just too proprietary.
Yeah, they are managing a highly complex vendor lock. And, it goes beyond just the physical stealth coating.
There's more?
Oh, yeah. The jet's Autonomic Logistics Information System, ALIAS, as they call it.
ALAS, right, the diagnostic software.
Exactly. The software that tells the ground crew what is broken and automatically orders spare parts. That is also proprietary.
Oh, wow.
So if the software flags an issue, you need the contractor system to clear it and source the replacement. The military simply cannot wrench on this aircraft without Lockheed Martin in the loop.
Which totally explains the financial market's reaction to this. I mean, for the Pentagon, these spare part bottlenecks and software hurdles are just massive headaches.
Right. Huge programmatic frustrations.
But for the defense industry, sustainment is the golden goose.
It is the intended economic model. I mean, we saw proof of this recently with the latest news that the Navy awarded Lockheed a $2.3 billion sustainment contract.
$2.3 billion just for sustainment.
Yeah. Investors historically fixate on the exciting, headline-grabbing metrics, right? Like how many jets were ordered this quarter or which new country bought in.
Sure, the big shiny purchases.
But those are essentially one-time upfront transactions. The real durable financial engine is in sustainment and modernization.
Because once that jet is on the tarmac, the meter starts running.
And it doesn't stop for the next 30 to 40 years. The contractor gets paid to maintain the software, supply the proprietary parts, manage the logistics network, all of it.
So the defense industry isn't just selling a piece of hardware anymore. They're essentially selling like air dominance as a service.
That's a very good way to put it.
It's literally a subscription model for national security. But if the meter never stops running, that financial burden doesn't just sit on the Pentagon, right? Because this jet is shared.
Very much so.
We have allies flying this exact same airframe all over the world.
It is genuinely global fleet, and that alters the stakes entirely. We are talking about hundreds of aircraft operating across multiple allied nations.
Like the UK, Israel, Japan, Australia.
Exactly. And they are all tied into this exact same logistical tail. They pull from a shared global pool of spare parts.
Okay, here's where it gets really interesting. If the F-35 is a networked, shared platform utilized by our close-knit allies, then this readiness problem isn't just contained to U.S. borders.
No, it has a ripple effect.
So I have to push back a little on the Pentagon's public posture here. If the U.S. is publicly struggling with spare parts to the point of needing a $13.7 billion bailout just for maintenance, what kind of signal does that send to our allies flying the exact same jet?
It's definitely a concerning signal for them.
Right. Like, if Japan needs to scramble F-35's over the East China Sea, they can't afford to be waiting on a proprietary sensor stuck in a supply chain bottleneck in Texas. Doesn't this undermine confidence in the whole system?
Well, if we connect this to the bigger picture, it sends a complex dual signal.
How so?
On one hand, acknowledging a fractured supply chain and a heavy reliance on contractors absolutely highlights a geostrategic vulnerability.
Yeah, I'd say so.
Every allied nation flying the F-35 is acutely aware that their sortie generation rate is tethered to a private, centralized supply network. But on the other hand,
there's that side.
The Pentagon's willingness to commit nearly $13 billion strictly toward readiness sends a powerful message about strategic prioritization.
Meaning they're finally recognizing that a high volume of jets just parked on a runway is strategically useless.
Precisely that. In today's climate of elevated geopolitical tension, deterrence isn't measured by how many aircraft you have on paper.
Right, it's about what you can actually use.
Exactly. It's measured by how many you can put in the air within a few hours.
So by asking for this massive sustainment funding, they're showing they're serious.
Yes, the U.S. is signaling to both allies and adversaries that it's pivoting from a peacetime production mindset to a wartime operational mindset. They are prioritizing functional, immediate combat capability over simply inflating inventory numbers.
Okay, I see the logic there. It's a shift from looking impressive on a spreadsheet to actually being lethal in reality. They're telling allies, hey, we're willing to pay the massive premium required to fix the logistics tail.
Right. They're putting their money where their mouth is.
But getting there still requires navigating this heavy reliance on the contractors. Let's dig into the reality of a potential conflict for a second.
Okay.
If a hot war breaks out and supply chains are suddenly contested or severed, can a military mechanic legally or technically bypass the contractor to get a jet in the air?
That is the nightmare scenario, keeping logistics commanders awake at night.
Seriously. Like, if we're completely dependent on a private corporate entity for software keys and specialized materials, what happens when global shipping lanes freeze?
Well, legally, the military is bound by the terms of the sustainment contracts and those technical data rights we talked about.
But what about technically? In a life-or-death situation?
Technically, they often just don't have the tooling, or the specialized manufacturing capabilities, or the source code to fabricate and integrate these parts independently.
So you're just stuck?
Pretty much.
Yeah.
If a supply chain node is disrupted, you can't just 3D print a highly classified stealth component on an aircraft carrier and expect the jet to maintain its radar-evading profile. The capability is fused to the contractor.
Man. So, what does this all mean? I mean, from everything we're analyzing today, is the Pentagon effectively locked into a financial ecosystem where they have absolutely no choice but to pay private contractors whatever it takes to maintain global deterrence?
It certainly looks that way.
Because if the options are pay $13.7 billion for spare parts or lose your geostrategic air advantage in the Pacific, that isn't much of a negotiation. The government seems trapped by its own procurement strategy.
This raises an important question about the very nature of modern military power. We are looking at a paradigm where national security and private industry are completely inextricably fused.
Yeah, you really can't separate them anymore.
You can't. And for an investor, a headline about maintenance challenges might initially sound like a hurdle, but the longer-term implication is undeniable leverage.
Right, because the government has to pay.
Exactly. The contractors hold a durable, recurring source of revenue tied to the backbone of Allied air power. The Pentagon has essentially tethered its geopolitical deterrence to a corporate balance sheet.
And because these modernization and sustainment contracts last for decades, this reliance isn't just like a temporary phase while the military gets up to speed. This reliance is the permanent operating model.
It is the new normal.
So that $13.7 billion isn't a one-off penalty fee. It's just the baseline cost of doing business in an era where technology completely outpaces traditional military infrastructure.
Yes. The sheer complexity of fifth-generation warfare demands this ecosystem. When defense budgets rise globally, a significant portion of that capital isn't going to field new experimental weapons.
It's going into maintenance.
It's going into the deeply unglamorous yet absolutely vital logistical tail required to keep the advanced platforms we already have operational.
Wow.
The military has essentially traded the independence of legacy aircraft for the unparalleled sensor fusion and stealth of the F-35, and the bill for that trade-off is now coming due in the form of sustainment costs.
It fundamentally reframes how you look at military strength. I mean, we always picture the fighter jet soaring through the clouds as the ultimate symbol of geopolitical power.
Of course, it's the classic image.
Right. But based on our analysis today, the real locus of power might not be in the cockpit at all.
No, it might not.
It might be in the incredibly lucrative, highly centralized, private maintenance infrastructure, making sure that jet has the right software update, a cured stealth coating, and a functional spare part.
Which leaves us with a critical, perhaps unsettling, geostrategic concept to consider.
What's that?
If the future of our global security relies on highly advanced platforms that require tens of billions of dollars in private contractor maintenance just to take off,
Yeah.
are our greatest national security vulnerabilities actually found on the battlefield, or are they hidden deep within corporate supply chains?
Oh, man. That is exactly the kind of question we need to be asking as this ecosystem evolves.
It's something everyone should be thinking about.
Definitely. Well, a massive thank you to everyone for listening or watching our deep dive today. We really appreciate you spending your time with us to break down these complex geostrategic issues.
Thanks for tuning in, everyone.
If you found this analysis valuable, please check out and listen to the other deep dives on our channel, where we continually unpack the intersection of global security, economics, and technology. Thanks again, and we'll see you next time.